The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here. This is the Wednesday, the Fed day, the 17th of September. And what we're really looking at is something that is going to be very interesting because the market in many ways is ready for some kind of a pullback for subscribers to my opening call. We're at least preparing for this. But so far, let me show you what's going on. We've got the Dow futures up 21. Didn't make a peak D in the futures, but we didn't make that in the cash. We've got the S&P at this particular point. Let's just go to the ES. So the ES is trading down 4 at 66.63 after making an all-time high yesterday. The NQ, let's go to the NQ. That's the futures. Made a leg D yesterday. Actually, could be a peak D today if there's no new high. And we've got the RQ. Let me just go to this is the futures for the, here we go, DEF. That made a high yesterday. That's the continuous Russell 2000 continuous contract. But prior to the open today, we've got the SMH futures, SMHs, the semiconductors, down $1.75 at 305.46. This is the early edition of the opening call. Of the Tiger Technicians Hour, that is, and at 8:08 a.m. in the morning. So you've got the futures down a little bit after making. So the futures are down in the S&P, down in the NQ, just a little bit from yesterday's all-time high. SMH has made an all-time high, just a little bit lower today. And I do want to show you something that I think is very important. You've got the bonds up 630 seconds at 118 and 530 seconds. That was a new recovery high yesterday. We'll see if that's going to be the case all the way through to 4 o'clock today, with the bond futures are going higher so that the yields are coming down. Well, that's going to be very important. I also wanted to show you gold. Gold's pulled back $20 at 3705.4, having made an all-time high yesterday. At a leg D, this is the moment where you would expect some kind of a pullback. Look at that as a silver. Silver is down almost $1, down 94 cents at 41.97 after making an all-time high. This is a very much like a reversal, a moment in silver, having had an absolutely spectacular move to the upside. We're taking something off our silver position. Not yet the gold. I should have done that, but I think I want to go one more day with the gold, see what's going on. Now, other thing that is very important, crude oil. Crude oil right now is down 25 cents at 64.27. If it was sharply higher, or even by the end of the day, if it goes into the 65.80, 66.20 area, I think that's going to be just a tip-off to say, just be careful. Crude oil could be going a little higher from here. What am I missing? High-grade copper. High-grade copper is trading down. Whoa, down quite sharply. It's at 4.60, down 0.09. And that's something to take note of. High-grade copper. What am I missing? Bitcoin, of course. Bitcoin is trading down 660 at 116,430 in leg D, just underneath the resistance that I notated here on the chart. I think that Bitcoin is still in a very choppy sideways consolidation. We'll see if that stays the case for the next couple of days. So, what did he just say? Need the chart? Did I not put the chart in? Am I busy talking here without the chart? Wait, where was the chart? What am I doing? Okay. Oh, that was very silly. I'm sorry. I apologize for that. There we go. We're going screen. Okay, I'll have to go through that again. Let me just run this again. You see, here's the Bitcoin, leg D, pulling back 625 points today. No, nothing serious. It's just struggling for the last couple of weeks. I've been saying that. I think there are a couple of weeks of sideways consolidation. Let me just run this again. YM, this is the Dow futures. The Dow futures are down, up 25 points at 46,145, having made an all-time high 5 sessions ago. And we've got the ES made an all-time high yesterday. That's the S&P futures. The NQ, which is the NASDAQ futures, made an all-time yesterday. Both of them are down a little bit today. I was mentioning that the RTY, this is the Russell 2000. Let me just finish this. That's a D right there. This is an E. Type that in. E in the futures, daily chart. E, and that goes to an F. All right, very good. And the weekly chart so far is at a leg E, and it's possibly a peak E if there's no new high in the next couple of days. So with that said, I wanted to talk about what I'm anticipating. So we've got the bonds right now. You've got the bonds trading up 6/30 seconds towards the high of the range, going from the 113s just at the beginning of September to today's high of 118 and 12/30 seconds. That's important. That means that the yields, let me just show you this. Here's the TBT. The TBT is the yield. This is the inversion of this is the ultra short limit 20-year Treasury bond ETF. And you can see it's at the lower end of the range. If you look at this weekly chart, you see this arching over. It's suggesting that yields do want to go down. So I think that at this particular point, the weight of evidence says that there's a leaning in the chart towards lower prices, but we have to see what the Fed's going to say. So all of this is contingent upon the not so much what the Fed says and does, it's what the market, how the market reacts to whatever they say and whatever they do. That's the most important thing. So what I wanted to do just before we go to a break, I wanted to say, I'm watching this and monitoring. Why? Because my contention has been for a very long time now that until there is about a 400 or 500 point decline in the Dow, followed the very next day with a very sharp pullback, so that you get a story that the media can pick up immediately and say, higher yields or Fed, tariff, whatever it is. I don't care what it is. But whatever the theme is, it has to be repeated, and you have to have a result. And the result has to be very negative, so that within days you've got this overpowering sense of something is wrong. The market doesn't like whatever is going on. Otherwise, it's just a one-off. You just get a sharp pullback, and the next day you buy the dip. That's the way it's been. And that'll change if you get consecutive selling pressure. And the Dow, let's go to the Dow cash itself, INDU, there it is. The Dow trading at 45,757 at the close yesterday. If it very quickly goes to the 45,300s and even lower, that says you've arched over. And then I mentioned, I discussed this yesterday about the Chapman wave unconventional flat base restart. And that's a technique I developed a long time ago, but it's not in place until you see this black line here in the Dow. This is the daily Dow, 45,592. That is the 14-period exponential moving average. When the Dow starts to trade, it can't just nick that and then bounce back. If it starts to trade under it for a couple of days, you've now got yourself, for the first time in a while, since back in July the 23rd at 45,000, when you went down to 43,340, that's the only time you're going to get some kind of sell-off, is if there's continued selling pressure for a couple of days.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
Let me go through this. Look, if you're going to some of the major stocks, let's just go to Meta. Oops, that was a wrong chart. Let me go over here. There we go. So META. Look, that's a really nice turnaround to the upside. Yes, if this cup. It's a half cup formation where it's rallied sharply. It hasn't gone to the 796.25 all-time high, but it did go to the 779. What did it touch? 80? Yep. It went to 781.36. So I'm watching this and I'm just saying, you've got this right side. Look, here's Meta platforms trading underneath the previous high. You've got Amazon underneath the all-time high. 242.72 was the high back in February. Most recent high was 230 in the 238, 239 area, and now it's sort of stalling just a little bit to the right. Nothing wrong. All of these charts are really good. Google, I go to Google, I don't do the Google L. So this is really a G/C right there. And look at that weekly chart, all-time high. This is amazing. This is Google trading at 252, up 72 cents pre-open today. Nothing wrong with these charts. So when I look at the charts, I say to myself, don't get ahead of yourself by saying, oh my God, there could be a major sell-off right here. No. Let's see what happens, because there's plenty of time. If you're looking at it, you could go, let's go to the SDOW, which is 3 times short today. We're still long the Dow. We haven't got any short position in the Dow. But look at this. It's down at the lows. It's at 37.47. If there is going to be a major, let's just say the Dow, at the end of the day, is down 400. This is the worst case scenario. So 400, let's say you bounce all the way up to there. You've got so much to go. If there's going to be a sell-off, you have time. You'll miss the exact ictus, the exact turn, but you have time. So I don't want to get ahead of myself, but I have prepared. We've taken some profits, taken really nice profits of some of our positions. Even our CDE, which is core mining, has had a spectacular move. We're in from 792. We've taken little bits off, but we taken off another little bit today, right here at 15.87, 15.88. Why? Because it's prudent. You've had such a spectacular move. It would be appropriate that at some point you have some kind of pullback that takes time, maybe price. So let's see what happens if it goes from the 16s to the 14s, or even under the 14. This is a fantastic move. If it takes a breather, there's nothing wrong with that. In fact, it's healthier to have these momentary stops. Look here, it was time more than price. That was in mid-August. It went sideways and then broke to the upside. So that's the same with silver. We got a silver right now. Look at that. So this is a pretty big move, down 0.88 in silver right now. Currently, that's the price. Look at gold. Down 18 at this point. It's going to come back a little bit. 18, leg D could be a peak D. So I'm watching this to say, okay, tell us what's next, because I can't tell you what's next. I'm preparing, and that's really important. I told subscribers, we've got to be ready. We've taken little bits off. We've taken very nice gains. And now what you want to see is, what is the result of whatever the Fed says? And that's the only thing that counts. It's not what you or I think, it's what the market thinks. So with that said, let me show you something else. You've got the volatility index, and that was something that was kind of a heads up yesterday. The volatility index for 3 days has had a very nice bounce. Going to this right now at 16.53, up 17 cents. Well, if you look at the cup formation, let me just show you, this is the design, this is the pattern, this is the formation that is saying, yes, you could get yourself a cup formation and it could go higher, but the evidence will be at 4 o'clock this afternoon. Where is it? If if the VIX index actually spirals from here to the 200-period moving average of 18.20 after the S&P. I don't have the New York Stock Exchange. Trade session just doesn't have it anymore. It hasn't for a long time. It's a little upsetting, but that's just the way it is. But I have the S&P. So the S&P is showing you, look at this. Here's the S&P, SPX.X. And that's an all-time high. Well, if the VIX index goes from a most recent low, and in a very short period of time, say this afternoon, is then trading up in the 18s, that kind of speed usually says to me that we should be done very soon with the selling pressure. But if in fact this is a slow rollover in the S&P, the Dow, and the QQQ, and the IWM, then maybe the volatility index takes its time. And as we're going to lower prices, so we are looking at lower index prices. So the volatility index moves up slowly, goes into the wick of this candle right here. It's already too many days to be using it, but I just as a guide would say if the volatility index is over 18.23 for 35 to 40 minutes at any stage later today, not right now, but later today, after, say, 2:30 or 3, then there's a really good chance it actually does climb to the high of the 2nd of September, which was 19.38. So I'm just preparing. I'm saying these are the things I'm looking at. I also wanted to just go to this right here because there were some questions. And because I'm having a little technical difficulty here, I got to CRGY. CRGY, let me get to that. CRGY. CRGY is Crescent Energy Inc., trading up 2 cents pre-market, pre-open at 8.78. Yeah, this is an interesting chart. Well, let me explain. In a chart like this, when there's been such severe selling pressure from the 980, 990 area and coming all the way down to 820 and then having a bit of a rally, what you would need, especially if you're looking at this arch formation in the weekly chart, is not a move below 8. It's at 878 right now. Not a move below 840, but a move over the high of 3 sessions ago of 893. that would be very positive. At the same time, when I'm looking at crude oil, the crude oil is down only 23 cents at 64.29. It's had some pretty decent moves, and I'm watching this very closely. I had a couple on my list today of oil stocks, different sectors in the oil. I'd rather have proof that this is, because it's done this so many times. It looked like it was going to really have a good rally, crude oil, and then it just stalled. I'd rather have the proof, and the proof would be starting to trade over 65. Says, aha, now you've got something different. You've got higher highs and, higher lows and perhaps higher highs. But until there's a close above 65, no, it'll have to be 66.03. Moving across, 66.03, the high of the 2nd of September. Until there's that kind of a high, you just can't really tell.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that. But how is an independent trader supposed to scan the entire market looking for these opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN.
If you're looking for a potential trade market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
Hi folks, we're back. Basil Chapman. This is the early edition, 8:35 a.m. It will be replayed. You'll hear this again, my usual 10 o'clock show. I had a question about Tesla. Tesla's down 4 at 417.51. Really strong breakout move yesterday, and just giving back a little bit. This is what the implication of all this is, that If you're looking at the different charts, for instance, Tesla's at legs peak C. Let's see if it goes above 423.13 today or tomorrow to get to a leg D. And very, very good action in Tesla. But if you go to most of these charts, for instance, Robin Hood, we're still long a small position in Robinhood, trading down 64 cents at 116.74. None of this looks bad. I mean, the technicals are still very good. Look at GE made an all-time high yesterday, and this morning's continuing 295.00, round number at this moment, up 2.03. There's nothing wrong with any of these charts. So I'm saying the only way that you would get some kind of hiatus in the rally is for the market to perceive whatever is said by the Fed as bad news. I don't see it on any technical basis. It'll have to be done fundamentally, turning the market down, and then you will get the selling pressure. So that's the way I'm looking at it. If you're looking at if we go to Microsoft, Microsoft pulled back yesterday. Today it's at 510, up 96. Actually, it's remarkable how many stocks are up in the 400s. And there are so many stocks. There was some in the, what is this? If I can go to AZO, which is AutoZone, trading at 4,223. So let me just show you this here. This, in fact, became an instant restart. I forgot to change this the other day. I did see it, but I didn't actually follow up. So this becomes not an E or an F. This becomes an alternate count. So I can just go immediately and say A, B, C, and D. And D is usually what you want to see in the Chapman methodology. D or higher, D, E, F, or G. From D up is where you start to see the chances of a much deeper pullback. Even this one right here was one of the sharpest pullbacks from the August, I think it was first slide from that peak D. And 3 bars later, it makes a new recovery high, all-time high. And it's just continued higher and higher. So this is AutoZone. Let's look at CTAS, Cintas. This is Cintas Corporation, uniforms, rentals. Well, it makes it a high of 229.24, peak D in the weekly, peak D in the monthly, and this was back in June. And here it is trading at 200 round number all of a sudden. How many round numbers do you have in this morning's early morning pre-market open? 200.00, up 71 cents. But this is usually a hint to say, hey, something's going on. Uniforms and rentals pulling back quite so sharply in the daily, weekly, monthly. Says, it's just in a rectangle formation, nothing to see here. Just one of those consolidations that you see. But it is something to take note of. And if you go to URI, this is United Rentals. This is another one I use. All-time high just a week and a half ago, and in the 980 area. It's trading right now at 958, and so it's a little bit off. And it's a peak D in the weekly chart, and the monthly chart is still very, very strong. So this is what I'm saying, that if you look at a majority of the stocks, yes, I can take some of these that I use as kind of guides, market guides, economic guides, like a Cintas, uniforms, not doing that well. URI, rentals, is still doing very well. Let's look at Marriott. I usually put them together because Marriott International Hotels, I like to just put this into the category of this is the public traveling, and made an all-time high up in the 315, no, I think it was less, 307.52 high in February. It slumped down to 205.40 in April. It's come back quite nicely. It's not really, it's really just sideways. So I'm watching that very closely. Now, I need to do a couple of things. Within the context of market movers, Toll Brothers, it's going to be very influenced by whatever the rates are coming up in the next couple of days. So peak D, not all-time high, that all-time, why did I not type that in? I think I did, and then I lost it. All-time high was 169.52 back in November. 169.52. Let me just type that in. It takes 1 second. 159.62. And when was it? 11 of 2024. And it took a little tumble, went down to just under 90. I mean, that's a huge move, right? And then what did it do? Oh, that's 24. I forgot the 4. And then what did it
For
do?
traders who crave risk,
It ran up.
Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, we're back. Basil Chapman, early edition, 8:42 a.m. So we just had that ad from Vista Gold. Look at this, 2.13, up 0.3. Right now, it went to a peak D yesterday, pulled back a little bit. What a spectacular move. Vista Gold is just, it was in the doldrums. It was actually, do you know what? In 2023, it was tootling around in the 30-cent area, 30 to 45-cent area. And now it is trading at $2.12. That's spectacular. So if you look at these golds, so look at this AEM. AEM is trading at down $1.92 at 150. It hit 155 or 6. Was that 156.18 on the 10th? Pulling back just a little bit from a peak D. Remember, D's where other things can happen. And the weekly chart is still very strong. So I'm just saying, Agnico Eagle, one of the very best of the gold stocks. Look at this spectacular move. Look at that beautiful breakout. Went from 36.69 in September of 2022. Here it is, 3 years later, and it's trading at 150.48, down 192 after hitting 100 and what was that? Did I say 156.18 yesterday? So that you just got to anticipate that there is some kind of a breather. Now, within the context of what we're looking at in terms of our portfolio, we have a very mixed portfolio. And we've gone into areas that I anticipated could be under the radar, at least for a little while, and could see some movement to the upside. Even if there's a general market pullback, I think that these are good areas, and we're going to see. So the big test will come over the next couple of days. And I just wanted to do this to show you the XLF. This is the financials, S&P Select Financial Spider. Went to a peak G the other day at 54.25. It's now at 53.36, and I'm anticipating that there's a chance. You see, if the yields come down, we might start to see, where the yields are going up, the financials will be moving higher. So we're going to see now what happens next, because if XLF trading at 53.66, early next week is starting to trade in the 52s or under 52, that's going to say, we've got our rotation here. Yields are coming down, and it's starting to impact some of the financials. KRE, this is the regional bank index, has already been pulling back from about 2 weeks ago, where it went to 66 point, just give you the exact figure, 66.97. And here it is at 63.84. So I'm just saying to you, there are a lot of clues that we have that the market is anticipating some kind of a yield pullback. Now let's go back to our yields. This is pre-open. So let me just show you the yield right now. This is the US bonds. trading up 530 seconds and 118 and 430 seconds. And you can see that there's a kind of a cup formation that's been forming right here. Cup formation, lopsided cup formation in the yields. This is the weekly chart. And look, here is the TBT, which is the inversion. And you can see it's arching over, and that is down 23 cents at 33.05. 3.305 is the yield. And that takes us underneath, and this is pre-market, so it doesn't mean anything really, underneath the 33.11 low of the 11th. So we're seeing some kind of arching over. Okay, so let me just do this for a moment. I had a couple of questions. Would I look at? Let me just do that. Yeah, FXI, that is the China large cap, made a really strong move yesterday. Today it's up again, 57 at 41.62. This is breaking out from the 39.78. Oh, look at this. I had this as a left side, right side price time match using Chapman wave techniques. So what I did was I used this particular candle right here. This is quite a while back, and I had it going to September to get to 39.78. Well, in September, we've just gone above that. And that means you can go to the next level, and the next level in the FXI will be resistance at 42.55. So let's go one step at a time. I did the Chapman wave inside wedge, dash green target repellent line. It just hit it exactly. We're going to be watching that very closely. Then another question came in. Could I look at KWEB? KWEB, KWEB. So this is the Chinese Internet ETF. Really nice move. ABC, I'm going to call this, let's just see if I'm right. I'm going to call that peak D right there. And then a new buy signal to buy mode started right here. And KWEB trading at 42.38, up 95 cents. Peak A, peak B, leg C. So I think it's going to go a little bit higher, and a leg E in the weekly chart and a leg D in the monthly chart. It took so long to get to a D from the starting point, which was back in 17. Let me just check exactly when it was. It was back in 2022 in October. It went to 17.22. And here it is, more than double. So it took a little while. And this is that rectangle formation. This is the technique that I always discuss. And I have webinars on it in my newsletter. If you're a subscriber, you can just go to it and go through these different webinars. This one is on the rectangle formation. They can go. It would be this target that I had right here. That was January of 2022. I just chose 39.80 as the level to watch, to monitor. And what did it do? It almost went there back in July of 2024, pulls back and goes to higher highs and higher lows. And what does it do? The rule is to go just under, right on, or just above the previous high. And there it is. And we've already gone higher. So that means I can now raise the rectangle to this level right here, there. And that would be 45 would be my next target. All right. And what does it do in time? If I use this as a midpoint right here, it says that by October, we should be getting to the 45 level. All right. So that's KWEB. Now, another aspect is, let me just go back again. So yes, Bitcoin. Bitcoin is down 605. Ethereum is trading up 9 cents at 42.40, but it also is stuck in the rectangle formation. So I'm anticipating that Bitcoin and Ethereum are just stuck for a little while before they break to new highs, and they just needed a rest, and that's kind of what's happening here. So I needed to move over to this. Question came in. I missed it, I think. Okay. And I haven't done that, so I'm going to do that here. Yes, okay. So question came in about Caterpillar. So Caterpillar, this is deep cyclical. Where did I type that? I'll type it over here. Caterpillar is deep cyclical. And yeah, look at this beautiful cup formation. And it's just gone, this has gone to a leg C in the weekly chart, peak A, B. You know, when I'm looking at this, I'm saying, we might not have to take a dive today in the general market. Some of these stocks are really doing nice. They look like they're very reluctant to go down. A, B, and this is the C in Caterpillar, and it's an all-time high. Fabulous action, 440.60, down 7 cents pre-market. There are a couple of others we're going to have a quick look at.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Yes, I will. Okay. Yeah, we're back, folks. We're looking at Caterpillar, as I said, was just a $1.50 away from an all-time high. That's fantastic action. PAVE, which is the Global U.S. Infrastructure and Development ETF, 3 days ago made an all-time high. And still doing very nicely. Pre-market is at 46.65, up 17. So when I look at when I look at both our portfolio, this is for subscribers to the opening call, and I look at just certain stocks that are kind of important to me. So far, everything looks really good. So I'm going to emphasize again, for the market to take it, to really take a breather, you're going to have to see a minus 250 or more today at the close, and then followed by a very sharp move down Thursday, even into Friday. That says, okay, now you've got a breather of a week or maybe 10 days. We'll see what happens. But anything else, just even a minus 50 and then an update tomorrow, just says business as usual. So let me just sum it up that at this particular point, the bonds are up 430 seconds. If the bonds move up almost a point and the yields come down sharply, that's really that's one thing the market might be wanting to see. But then it might be saying, oh, this is terrible. if the Fed is lowering rates, it means that the economy is bad. It's so complex. Let's just look at the market. The market will tell us. If the Dow is over 250, the S&P is over maybe 63 points, and then goes down again tomorrow, and all the indexes, this is the Nasdaq, the futures up one right now, but let's just say they are now at 345 today. They are down 50 points or 100 points. That would be the clue. At this point, we don't have anything on that. So I'm saying, let the market tell us. We've actually just nibbled at a kind of insurance policy, just a nibble. We could be out of it even before the Fed makes a statement. But I'm just saying, all the technicals that I'm looking at are very strong. However, we've got to be prepared, and we'll see what happens. And it will have to be fundamental news that brings the market down. Have a wonderful day. I will see you tomorrow, and check out my opening call daily newsletter. Stay tuned for Tommy coming up with more in the market kickoff. See you in a